The time has come, it's almost here. Another day on the markets, approach with no fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Digging deep with no regret. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight. Hold on tight, the stage is set. Digging deep with no regret. Red and green bars leading the way. Welcome to the angle. No time to delay. Cashing in on the highs and lows, where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel the run with a fire that never dies. Hold on tight, the stage is set. Digging deep with no regret. Red and green bars leading the way. Welcome to the angle. No time to delay. No time to delay.
Good morning, everyone, and welcome to the most entertaining intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I'm to turn complexity into clarity with a shot of adrenaline. And we are in the middle of the week. Earnings season is underway, and we already saw the beginning of the big tech earnings last night with Netflix currently down about 7% in the pre-market on meh earnings. Not fantastic, but not horrible either. So that's our first big one out of the way. Today we have another big one. We have Tesla after hours, and we got a slew of other earnings because, hey, we're in earnings season, so you're going to be seeing a lot of them. And with the market sitting where it is, we are in a very interesting spot on what you should be keeping an eye out, and we're going to talk all about that. I even have a few stock setups that I'm personally involved in. I did a lot of money rotating yesterday, pushing money here and there, and there's a lot of interesting opportunities out there that you may want to consider. So make sure you stay tuned if you want to hear some of that. Now, before we get too deep into the charts, into the market, let's do what we always do. Check out our Catalyst Watch for the day. That way we know what's going on so we're not caught off guard like some people were yesterday. If you're trading intraday, you kind of know a few people are just kind of freaking out. If you're trading SPY specifically, like I said, and I've warned you guys in this program, at any point in time, Trump can just fart into a microphone and it can affect the market up or down, right? Hot air rises, it can go up. If he says something bad, it could go down. And the market didn't like it, but all in all, yesterday really didn't go too much of anywhere. So circling back to what I just said, let's check out what we got coming down the pipe for today. And really, overall, a pretty quiet day. Nothing really scheduled to occur intraday with the exception of the 20-year bond at 1 o'clock, which could affect markets. Obviously, as we said before in this program, the longer term the bond is, the more of effect it has on financial markets, because that can affect, obviously, when you're looking at the 30-year or the 20-year, that kind of affects where the strength in the U.S. dollar and the economy generally is more longer term than your shorter term bonds. So you're going to want to keep an eye on that. Now, I already alluded to Tesla after hours, but you also have Trump meeting with the NATO secretary at market close. So as long as that doesn't go early, you should be okay into the close. But you have IBM and Tesla after hours. Those are your big earnings to watch out for today. Overnight, American Airlines, so if you're exposed in any airline stocks, you may want to be conscientious of that. And T-Mobile are the big ones I'm seeing overnight. And I will be live again tomorrow, so if you want to come hang out again, we'll be live tomorrow. We'll walk you through that and get you through the end of the week as well. Now, looking at the market right now, in pre-market, we're currently sitting just above this LOI here at 671.63. As I mentioned last time I was live, which I believe was Monday, it's now Wednesday, how important the 670.23 level was, and I said on that program, if we closed above that level, I would be bullish here in the near term, and we did. We closed above that level. This is Monday's price action. Took a little bit of a fight to get there, back tested a few times, but eventually closed above it. Fast forward to yesterday, we tested it again during market hours. This is your 5-minute candles. Wicked it, had about 4 taps on it, 1, 2, 3, 4, and continued to the upside without getting back there again. Today, looking pretty good. Didn't even interact with that level here in the pre-market, which is good to see, especially if you're a bull. I would still keep this big red line on watch for the week. While I did say on Monday I am more bullish than bearish as long as we're over this level on the weekly chart, we're kind of within earshot still, right? We're not strongly above by any means. We're $2 above it about. That doesn't stoke a ton of confidence. So take that with a little bit of a grain of salt as you approach the market today. Good morning to Toby. Good morning to Negum in the chat. Eddie, what's up, my friend? Hatchet saying good morning. Microsoft flying. We'll check about that. We'll check that out in a second. And BC Beezer with the morning. Good morning. Thanks for popping in. Microsoft flying, let's see. Up a little bit, up about 0.5% in the pre-market here. See if we got any news or anything. Looks like a upgrade, analyst upgrade here as of 40 minutes ago, which would probably line up with the chart. Yeah, right around here-ish. So could just be an analyst upgrade. Also, we're getting closer to market open. You guys know as we get closer to open, we see more erratic pricing. So you could see big drops, big bumps, big dumps, etc. So that's not too abnormal. We're going to go through all of the Mag 7 in a little bit. I want to wait till market opens. EB dropping the good morning. Good morning, my friend. Thanks for popping by. Keep an eye, though. We're already seeing a little bit of I don't want to use the word divergence yet, but it is peculiar to see that the SPY is green right now while our Qs are marginally red, and IWM is down actually a decent amount, down 0.3, decent relative to the other two, I should say. Down about, we'll call it 0.4% right now in the pre-market. So we're going to want to keep an eye on IWM. Now, at market open, guys, I'm going to be focused in on 1 or 2 names specifically because I do have some open weekly contracts on them. So we're going to hang around. Currently, I opened a long yesterday on General Motors. And had a good day. I got in long on General Motors on, here's the contract down here, the $65 calls at $1.28, and my highest trim on those contracts, and to be clear, I'm just in runners now, so don't do anything dumb. Highest trim on those contracts was at 263, so I exited most of those, all of them, at 105%. I've got half of a runner size on, so I do want to see if this goes in the money. If you do have interest in trading General Motors, you're going to want to watch the 68 strike. So notice here, and actually some of this OI obviously carried over because we saw what happened yesterday. I have a screenshot of yesterday's OI somewhere in the Discord of what this looked like yesterday prior to obviously the earnings. Now this has changed a bit and you see a lot of options activity here. So we have a little bit more data, which is nice. But what I was looking for is to tap 68, and if that breaks, getting a little bit more of a push here. And this was like 0 yesterday. So that's very interesting to see. A lot more activity up here. So with me sitting pretty at the $65 calls, hey, I wouldn't be too mad if this squeezes up to 73 with a little gamma action here. Getting over 67 here, you can see just by looking at the chain. Again, guys, plain and simple stuff to see. When you move the price up, the market makers are going to delta hedge contracts that are in the money, and assuming they're going to continue in the money, right? They need to prepare to have those shares to for any calls that are exercised. Conversely, as puts go out of the money, they de-hedge those positions. So you kind of have a waxing and a waning. And the same thing works in reverse. When prices go down, they can de-hedge the call position, hedge for the put position. So as we're at the 67 level, you see actually a decent little battle here in terms of OI, right? And even at the 66 level, where OI is actually stronger on the call side. So if it doesn't break 67, then General Motors are going to get trapped this week probably around 66, between 65 and 67. 67 breaks, there's a good opportunity here to just get this thing to squeeze to the upside, which is part of the reason why I kept half a runner size position on. The other name that I am in a weekly contract right now in an open swing is actually short AMD. So yesterday on AMD, what I was looking for was essentially, and I called this out in our Discord, was 235. I made a little boo-boo in execution where I went a little too far out the money because essentially I was looking for a more volatile drop. Essentially this candle here, but I was looking for it back here, right? So it went in my favor, except it didn't go as quickly. And that's why you have to be careful and you have to understand the Greeks, because especially if you're playing out the money, you need to understand velocity, right? How quickly things can move. You want that gamma to work in your favor. And if it doesn't move as quickly, you need to understand where to cut and everything. So I had a small gain here on the first tranche for like 6 or 7%. Now I'm still long those put positions, basically risking 240. So as long as it stays sub 240, I'm still going to be long the puts here, looking for a 235 break, or essentially call it yesterday's lows, so 234.02, and I'm long the 235 puts at the moment. So we'll see, keep a tight eye on that. But I just want to let you guys know that's going to be what I'm personally watching here in the market open, just to see if I need to adjust strategy, cut, trim, etc. Two stocks I want to talk to you guys about. We'll do a run through later on. BRBR. I made a post on my X account on this. If you don't follow me on X, pop over on there. The thing's on the screen this way, so you can follow me there. But I made a post on BRBR, so you want to check that out. Make sure you do, and I'll talk about it here. So hang tight. We'll talk about it. And then also a short-term trade I'm kind of excited about that I'm going to talk to you guys about in a little bit is GoPro. Meme, yes, but 'tis the season for memes with Beyond squeezing, right? We can talk about that if you guys want, right? We have all these other meme names popping off. There's a lot of meminess going on. And in general, the way that this GoPro chart looks is pretty solid. Now, it is hot, just like every other momentum trade I've talked about on this program. You have to risk appropriately. But this company is only a $350 million company with a 115, roughly, free float. So 60% of the shares essentially are locked up, quote unquote. So this could move very quickly, and that can go for or against you. So we'll talk about that in a little bit as well. Let's look at our sectors before the market opens. We've got about 3 minutes here, and quick glance here, or cursory glance. A little bit of Christmas tree action, as I like to say, but the green sectors that are green are pretty green, meaning utilities right now up 0.3%, energy up 0.6%, consumer staples marginally up, tech marginally down, real estate marginally up, materials marginally down, industrials not changed really, healthcare big up, almost 1% here, financials flat, consumer discretionary flat, and comm services a little down. So overall, the red sectors are like just a little red, while the green sectors are pretty green. So that leans to support more of a bull thesis on the day, which we'll keep an eye out for as the day rolls on. Yesterday, I did close out my Google swings for whatever it was, 80% or something, and those were expiring on Halloween anyway. I was probably going to close them this week. They were in the money. Got a little bit of a spook on the OpenAI browser thing, so obviously Google took a hammer there, and looks like it was just a sweep for liquidity, so oh well. But still made a decent trade there, and now Google bouncing back pretty hard, pretty quick. Overall, now getting a little bit dump into the open here, but overall, quick bounce back from that drop, because it went all the way down to, I think, 245, right? What did we get the low there? 244. Now up about 10 points from yesterday's low, so pretty remarkable bounce back there. And again, anytime we Google, there is a big fear with advertising or anyone at all encroaching on internet search. Google gets hit. And I don't think people understand with Google that it is so much more than an internet search company. And I think actually probably everyone listening understands that, but maybe a lot of like more hands-off traders and investors don't understand that Google is much more than a search engine nowadays. But obviously a big crux of their business, big core of their business. It's what they came from, right? So any kind of threatening news there was obviously going to affect the company. Now, real quick before the market opens, I do want to look at Tesla. Currently sitting at 443.40. Obviously, this is going to have very high IV on these contracts today, so be very mindful if you do decide to trade Tesla before earnings. You're playing with fire in terms of IV. Unless you're selling, whatever your strategy is, at least keep that in mind. Little bit of a no man's land here on Tesla. So we'll get back to this in a little bit. As long as it's north of 433, 31, I would prefer the bull side of the trade than the bear side of the trade. We got an alert for AUR. That's a company that has been sucking eggs hardcore. Pop back to that in a little bit. I am also long some Peloton as well, and I know some of you really like that name, so maybe we'll check in on that as well. So, guys, stick with me for a bit. We're going to look at some individual names at the moment. Like I said, I'm watching GM. I'm watching AMD at the moment. Intraday for some short-term price action. I'm watching GoPro here. We're going to talk about this on the program live in a little bit. This is a very, very good look for GoPro at the open if it can sustain over this level here. What I will say is I'm already long GoPro. And if you are interested in a long on GoPro, you could still take even an equity stab where it's currently sitting right now with roughly a 219, 218 stop loss. That is what I'm saying right now. I personally am already long. If I wasn't long, I may consider a long with that risk in mind, which would give you roughly, I mean, we're moving now, but we already hit my first price target, 241. Watch this go over 250. We're going to have some calls go in the money. You've got this week alone, 3,500 calls on the 2.5 chain waiting to go in the money and no real resistance here on the put side. You got some more calls here. Good gamma ramping opportunity short term and then even to next week as well. And I believe I looked out to the 7th. If this loads, there we go. And the 7th, not bad. That $3 is going to be a big spot. So I like GoPro a lot. I'm going to say it a lot. We'll talk about it I'll record a little segment on it in a little bit. But if you were to manage a trade with the appropriate stop, you could probably be very happy with it. Do with those words what you will. Okay. AMD kind of sitting flat here at the open. Not much to see. To be clear, I'm currently red on this position. I have about a 540 entry? 547 entry on AMD. These cons are at 380 right now. I'm long the 235 puts on AMD. If you have any interest in that, that's what I'm watching there. Where's my General Motors? Dumping here a little bit. Like I said, these could fail. This is a runner size position, so this could fail, but breaking over 68 does have more squeeze potential, which is why, since I can afford the runners, I want the runners. If you can't afford the runners, don't take them. That's what I like to say. Let's take a peek at Netflix. Dumping a little bit here at the open, about 9% on the open, near its 200 MA. On the daily, let's check out the weekly. Does that line up? I love when the weekly 50 lines up with the daily 200 when you get that. So the 50 MA on the weekly on Netflix is 1076, and on the daily, the 200 MA is a little higher, 1113. So pretty close here. That could be a little sticking spot there. So we'll see what else we got. I don't like, so okay, if I wanted to be wow, GoPro going, I might not even get the chance to talk about it. We're over the 250 strike now. Let's go. Anyway, I don't like the fact, so if I'm a bull on Netflix, you had a tight period of consolidation here from last earnings till now where it didn't go anywhere, right? Very tight, a lot of potential distribution here, and now coming down. Now, I'm not saying I'm going to short it, but I am saying to be cautious here. You're at the bottom of its range, essentially, if you're considering this October 2nd candle here. You're at the bottom of your range. It's holding up above it. We did wick below it, and there's a little bit of support under here, but this is a bad look on the daily. Now, I will also say that I don't think their earnings were that bad, honestly. So, do with that what you will. But this would be a no-touch for me. I wouldn't intraday trade this because the daily, it's already a decent gap down. I just wouldn't touch Netflix. I know a lot of people are going to be trading this. I just personally wouldn't touch it at this juncture specifically. Oh, there goes my AMD. Contracts are at 445. Almost in the money. Let's see if we can get in the money and break yesterday's lows. Again, on AMD, yesterday's lows were 234.02. So you got $2 lower here on AMD, looking to sweep down there and break that low. That's going to set you up for a decent pull here on the daily to at least like this 230 area. I was targeting like 225 if we got volume yesterday. So 230 to 225 is where I'm looking here short term on AMD. And again, this is a weekly contract, so it's a very short-term trade here. I'm not speaking like longer term or anything like that. Let's pop back to the market, and then we'll hop back to AMD just to see how things are shaking out here. Ooh, a little bit of fall from grace here on SPY. Like I said, you had to be careful. This 670.23 area is what you want to watch this week on SPY. And I said right before the market opens that we're within earshot of that level here. So I'm not necessarily saying you might want to take a long here, but if there is bull support, it's going to be in this zone between 670.57 and 670.23. If this 670.23 level fails, though, it is really not looking good on the daily chart. Looking out here, we're kind of consolidating at the highs. You could call this some level of a double top. It's not technically. I know, don't crucify me. But the fact that we never really had this MACD flip back over on the daily. This last daily candle is actually a doji candle. And if we get a push lower underneath that key level today, this could be like a fake out, right? A fake out breakout where it looks bullish and then it goes. So you still want to be super careful. You are still, again, until all-time highs break, we're still within this massive bear candle here from that previous Friday. Not last Friday, the Friday before. So this is an area to be extremely cautious and just keep an eye on things like volatility. Now, I will remind you, and I did check last night and this morning, that we're still technically in contango with volatility. That can change, though. Right now, we're up at about 19 VIX. So volatility is moving up quite a bit, engulfing yesterday's candle thus far on the VIX. So this is going to be for most of you, and you guys know if I say for most of you, this probably applies to you listening. It may not. Do what you want. Keep your pride. I don't care. But for most people, trading today is probably going to be a bad idea. And when I say trading, I mean intraday trading. Like if you're day trading, quick calls, contracts, puts, etc., probably going to have a bad time taking your chances today. Just saying. Anytime this VIX is higher, think of it as a lower probability of you being successful, which in turn, you should probably consider lighter size on your trades because even if you're right, you won't take on as much risk. And when you see more volatility, those percentage gains tend to be bigger, right? You tend to make more money. So you might think, oh, well, I want to put more money on the line because I'll make more money. No, not necessarily, because you can also lose more money. You don't want to lose money because guess what? If you lose all your money, you can't make any money. And that's not a game you want to play because I don't. I don't think anyone wants to play that kind of game. So we're going to give a minute or two here and just kind of let the market do its thing so far. Nothing too crazy. I'm going to check on a few things on my other screen here, see how things are performing as a whole. Interesting. Coca-Cola yesterday had a pretty good earnings. You might want to watch it. It's a boring stock to trade, but maybe keep an eye on Coca-Cola. Something to consider for your portfolio here if you're looking for something a little bit more boring. I did also open a long on Oxy yesterday, and so far up about 1% in market open thus far on Oxy. So looking pretty good for gas stock. Now, if you take a look at, what is it, USD? Not USD. Damn, someone refresh my memory. Someone in the chat, shout me out. What is the ETF for oil? It's not USD. No, someone will tell me in the chat what the ETF is for oil, or I'll just type oil ETF, see if I get it. This is not what I was thinking. Damn. Anyway, I was looking at the chart the other day. I don't know why I don't remember. I'm blanking. I was looking at the chart the other day, and it looks like oil's actually ready for a move here in the near term. That's something that interests me to have a position on. And a lot of people think oil's dead, and I think a lot of people think oil's dead because they're more excited about all the other names. USO, thank you. Thank you, user XO2CP5DC9R. I knew it was a U something. I just couldn't think of the thing. I knew it. I'm like, it starts with a U. So what I was looking at here on oil, I'll look at the monthly to make things simple. Look at this massive base here. This is crazy, right? We're going back to 2022. But what I was mainly looking at here, you could see on the weekly, was we're kind of like, anytime we're below or at around this like 66-ish area, which now we're at 69, looking pretty good on the week here. Whenever we're dipping down high 67s into the 66s, it tends to get a pretty quick, if not a quick reversal, a sharp reversal. You could look here, quick reversal, pretty big reversal here, another reversal here. The bear moves at that level don't tend to substantiate for longer periods of time. Now, it doesn't last forever. Obviously, we hit a high here, in this 83. You got a pretty defined $20 zone here. What I was looking at was, again, we tapped into like that high 67-ish level off of 3 red weeks. So, like oil getting smacked here, right? So, this is kind of like a little asymmetrical bet that oil gets some level of a rebound here, even though from like a technical basis it looks pretty meh. This is what I was looking at here to get at least some level of bounce here and pushing back up to around like 73. On top of that, go to Oxy. Oxy, clearly very similar price action. Again, this is on the weekly to USO. This is looking like we had some level of a drawdown. This is the month. Quick grind up, and then I would argue kind of an oversold kind of move here on the month thus far. And as long as we're protecting essentially around this level, the high of this candle, 41.55, which we're not there yet. And again, this is a monthly candle, so you have to extend your thought process a little longer. As long as we're around that level, 41, you can extend it to 40, low 40s, so like 41.55 is like a support zone. I like Oxy here for a level of a rebound. And also, if you want a crazy inverse head and shouldery kind of look, there it is, which it's not. I'm just making a joke here. I just think there's a good opportunity here on Oxy near term, where it should get some level of sharp reversal. On top of that, you do have earnings coming up on 11/10. So whenever I play earnings, I actually spoke about this morning in our Discord community at Exclusive Trading. You want to check it out? Links in the bio. But when I take a swing position on something that has earnings coming up, I like to take the expiration after the earnings date for a number of reasons. You take it before the earnings date unless you're looking to specifically play the run up into earnings, which you can. You can capture obviously a little bit more IV. But I like going 1 or 2 strikes after earnings because let's say this chart works out for me, and let's say I get to $45 on Oxy before earnings, right? I fill this gap up here. It'd be fantastic. Now I could trim out my position. Maybe I can hold a few runners into earnings, and then I can take an earnings gamble where I'm not actually putting new money, so to speak, into an earnings, but it gives me the opportunity to say, hey, I've made enough money. I can go basically risk-free into this earnings play. Maybe I'll do that. So that's something I want to highlight to you guys where you're looking, especially in this time of year. Anytime we're getting like big earnings season, obviously, it comes once every 3 months. We get to the big earnings season. Look for those opportunities where you could get some at least stocks that fire down pretty solid here like Oxy, showing some level of support, some level of buying, some level of some sort of reversal to extend a long position into, if you can, their earnings and afterwards, where you can more than likely take profit and maybe have a position on prior to their earnings. I do want to highlight again, GoPro is over 250. All my drawings disappeared. Looking pretty good. GoPro near the high a day. I am long some GoPro commons for the small account in our community, our Seed Decree account, which is up 16% overnight. I long those literally at close yesterday. And I'm also long in my personal account. I did not alert this because I know people are stupid sometimes. I am long the November 21st $2.50 calls on GoPro, sitting currently up 70%. Bellissimo. Not too bad. Pretty solid. Looking good. Having a good day thus far. A lot of people have been having a really bad time, which is the time where I like to say you got to slow down and just kind of work through the motions. Let the market do its thing. Don't rush. Don't force things. AMD back to the highs. We'll see how it reacts up here. Peloton hasn't really gone anywhere from market open. Another one I want to put on your radar, guys. I've talked about this. I actually made a video on this one. This used to be stock ticker BIG. Big Commerce is now changed its name effectively in its ticker to CMRC since I last spoke about it quite a while ago. This is one of these names that I'm accumulating at the down here a lot. a lot. I also have personally opened up a call position through earnings on this name specifically. And for those of you that watch me, I very rarely take an earnings bet. Now earnings are coming up. I have time on them, so I could work out and make money before then. I very rarely take an earnings bet. I'm taking an earnings bet on commerce.com. So do with that information what you will. Just putting it out there. And a lot of the times, because I'm not a financial advisor, I can't say certain things on this program, especially in a public forum. But what I can say are things that I currently am doing, and maybe, if you'd like the idea, to consider in your own investing theses. So that's why I'll be very clear about certain things that I've done and not say other things explicitly, just so you're aware. Netflix getting a little bit of a rally here, looking better. GM pretty flat. Omar says AMD. Yep, AMD near the highs. Again, my risk on AMD is 240. So as long as we're not surpassing 240, if we chop all day, then I'm going to close it out for risk, more than likely. I do see it looking more bearish here in the short term. And for those of you that have watched me or you're in our Discord community, it's very rare I take a put position or a bear position. And when I do, I tend to be a little bit more accurate with my bear positions than my calls. Not that my calls are bad. I've got like a 90% hit rate, but I think when I take a bear trade, it's like 92%. A little bit more accurate, and I'm a little bit more anal when it comes to picking a bear trade. So we'll see. This has range both ways. I've got basically $3 of risk. I'm in the middle of my risk here, essentially. So we'll keep an eye on it. We'll come back to it. I'm going to get rid of this. So I don't have to look at this right now. And we're going to pop back to the market, see what's going on across the wider range of the entire stock market right now. Nice little V bottom here on the SPY, as I kind of alluded to. I said, if you want to take a call, you might want to take a call here. I didn't do it. I put my money where my mouth is, and I take trades that I think are like with an 80% success rate or higher. I did not think this was an 80% success rate or higher, but it was something to consider. So a little bit of rally here. We're just stuck in between these LOIs here. This is very choppy price action. Yesterday was a very choppy day. I actually think, and I was going to wear my Green Day shirt today. I specifically didn't wear it in hopes to protect all of you, because so far the Green Day curse has not been broken. If I wear a Green Day shirt, specific Green Day shirt on stream, is a red day for the market. And they're like, the market needs a Green Day today, otherwise we're going red this week, I think. So I didn't wear it on purpose, just for you guys to protect your portfolios. You're welcome. I will take boxes of chocolate as an early Christmas present, or I also accept 5-pound containers of whey protein isolate. Your choice. But I purposely didn't wear that shirt because I was really hoping that we see a Green Day today. And like we saw yesterday, it was a very choppy day. Today, I'm really anticipating another kind of day of chop. Like, we don't really have any news to really push us around. And during this time, if there isn't a lot of news that's going around, and also we're in earnings season, you kind of see a very neutral market. The market doesn't really go much of anywhere because people are hedging positions, right? People are preparing themselves, they're unloading from Netflix, and maybe they're longing Apple, or whatever they're doing. Money's moving around, and conversely, the SPY may just not really do too much, because although yes, someone might sell all their Netflix and buy it all into Google, it's the same net dollar exposure for the SPY, again, in theory, right? So that's why I'm really anticipating another kind of chop day today, especially leading into Tesla's ER. However, I will preface that by saying if this 670.23 breaks, we're pushing bearish on the week on the market as a whole, and you need to exercise extreme caution, especially now that VIX is back above 1830. Remember, if you watched the show on Monday, I talked about how whenever you're in a big range like this on the VIX, it's wild. You're going to have either big push on VIX, big dump on VIX, whatever. You're in that $2 range here between 1830 and 2030 exactly, where you could get a big markup or, well, at this point in time, not really a big fall, 30-cent drop. But there is that possibility of a bigger markup on volatility today. So that aligning with where SPY is kind of very shiftily by a key area of support on the week, you may want to pull back a little bit and be a little bit more defensive than you otherwise may be. Also noticing that although NVIDIA is pushing up, we are underneath that 183.30 level. I'm not going to keep talking about it. You guys know how important that level is. Google's doing pretty good now, up 2% after yesterday's kerfuffle. However, That just kind of resets us to yesterday or the previous day's price, so I wouldn't really consider that like, oh boy, a gain. So that kind of just puts us back into neutral here on Google. And again, Google is your canary in the coal mine. If Google fails, your other Mag 7 names more than likely are going to see some longer term downside. Now, off that topic, I talked about how Apple breaking above these two key levels is going to lead to a nice pop. And we saw it. I personally missed it, so I'm not going to pretend like I hit it. I missed this. But now you're going to back test there. So if we do see the bulls support at these two key LOIs, which is an old all-time high and another LOI here, then you might get a nice little continuation rally on Apple, which the market desperately could need. Keep in mind, you have earnings next Thursday, I believe, right? Yeah, next Thursday. So in a very tricky spot, all things considered. Tesla, I wouldn't touch it. I know at least one of you is not going to listen to me, and I don't really care. You do what you want. But I personally really would not touch Tesla at this juncture. I don't think there's an edge either way for the bulls or the bears. You've marked up pretty high. You're near all-time highs. You've had a solid rally. Like, it's not bad. It's not bearish, but you've had a solid rally here. Yes, of course, it could keep going. But also there's an argument to be made that some sort of retracement could take place, and a catalyst like earnings is just enough to have that happen, or, again, propel it higher. It's a crapshoot. That's why I don't like trading off of earnings unless I have really good feeling and I take the proper risk for that trade. Amazon consistently, yesterday it did actually close above 221, but has not really sustained above that level at all. Having a real hard time. And Meta, I'm actually really impressed with it. Held that gap, that ER gap, now heading into its next earnings next week, essentially kind of bumping around here before pushing a little higher. I think my AMD hit my stop. Let me see. Hit my stop? No, we didn't. Okay. AMD up near 238 right now. Triangle Trades, welcome, my friend, saying SG. Assuming that's a ticker. Sweet Green? You can take a peek. It's a $1 billion market cap company. Grinded into the dirt. I like these kinds of charts. Near all-time lows at 610. What do they do? I'm assuming it's a food company. A restaurant and lifestyle brand serves healthy food at scale. The company has designed its menu to be customizable and convenient to empower customers to make healthier choices for both lunch and dinner. The company's core menu features approximately 13 signature items, which are offered year-round at all of its locations, including a new steak plate. We were putting this in the description of the company, like, oh, wow, guys, we have a new steak plate. You better go long. What are we doing? Okay, blah, 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 blah. Do they have what? Hey, Triangle, can you let me know what company, like, not what company, obviously it's Sweet Green. Is that the name of the restaurant? Or do they have other restaurants and whatnot? And also, are you looking short-term or long-term? We can take a deeper look here. I like beating down charts like this. Those are my favorite ones to trade. You guys know I like to pick the raccoon trades, the trash out of the dumpster and rock them. Those are my favorite. GoPro up at 262. I will get to talk about this at some point today. Even if you took it when I mentioned it at market open and I mentioned a specific stop in mind, you would be up, I think, 30%, 20%, 30%. What are you up? Quick math. 20%-ish from open. Which I guess it lines up with Open's price. That was dumb. I haven't had my caffeine this morning, so you're going to have to forgive me, guys, if I'm a little lagging on the brain energy. Triangle says high short interest. I'll dig into it a bit later then. You want to be really careful. So in general, if you're looking at companies that have high short interests, yeah, like Beyond Meat, yeah, be careful. When you're looking into companies with high short interests, a lot of the times a high short interest company has high short interest for a reason. A lot of the times a company has high short interest because they suck. Or they have bad financials, they make a bad product, their CEO's leaving, whatever is causing a lot of people to short the stock. Especially when you get into the range of a company like SG here, where they're at a $1 billion market cap, their free float's about 100 million shares. So there's enough there to bully the price around. And if you're not right, meaning you long a company with high short interest, and you don't get your short squeeze, essentially, the price can continue to get bullied down, especially as people either A, sell or B, short it. So it's not that saying it can't work. Of course it can. Any short squeeze trade can work. But you got to keep in mind that if something is highly shorted, there may be a reason for that. Like with Beyond Meat, when we saw Beyond take off, right? It's still going. But let's not forget the pain that it got it down to 50 cents, right? So let's remember that this stock, let's go out on the monthly. So this is an example of why you want to be careful with highly shorted names. This is Beyond Meat. It's getting a push right now. It's getting a squeeze, etc. Everyone and their dog is talking about it. However, this back in 2021, you guys know this, was very expensive. It was $160, dropping all the way down to, we'll call it the beginning of 2024, was still trading at $11. And then if you want to go a little bit further, at the start of 2025, we were trading at $3.84. So now you're over that, which is great. But that doesn't change the fact that, let's say this whole time as Beyond was going down, you're thinking short squeeze. It's going to short squeeze. It's going to short squeeze. It's high short interest, right? And you keep longing and longing and longing and longing and longing and longing. Now you're getting the squeeze, right now. Even after it hit 50 cents, and even if you kept dollar cost averaging in, depending on where you entered, you may still be red. Because you just did it wrong. And not that you personally did it wrong, but because playing these high short interest names, you have to be very calculated, not only in your risk, but also in your entry. Look at these weekly candles here. Like, it's not common, right? It's because it's a short squeeze. Shorts are getting squeezed. They are. It's what's happening here. When you see price action like this, of course, you can make a lot of money if you're in at the right time, but you don't want to be the guy who's over here. You don't want to be the guy who's been loading Beyond stock for the last year, right? Because, mind you, even just 3 months ago, Beyond was up at like $4. So let's pretend that you decided that I think Beyond's going to short squeeze because I saw it break the 200 MA right here on 7/24/2025. And let's say you don't manage your risk, you have no stop losses on whatever. It grinds down. Now think of the mental anguish you put yourself in because you bought the stock at $4. It grinds down to like 2, and then it starts doing this wild gappy action. It drops down to 1, moves back up to 2, then drops all the way to 50 cents. Are you going to hold through all of this to then get squeezed to $5, which again, and we're assuming here, let's pretend that you want in on the long here when it looks like it might have squeezed. So let's say you buy like right around here to there. How much of a gain is that? 40% to 659. So let's pretend you get out at the current price. I hate when it does this. Hold on one second. Let's go like that. Drag that down. There we go. So let's say you got out at like the current price, which is right on here. That's a 20% gain. Not only did you wait this whole time, you went through all of the mental anguish, so you're risking mental capital here for 20%. I'm sure a lot of you can make 20% a lot faster than doing this. So please be very, very careful with high short interest names because, yes, they're attractive. Everyone in retail goes, oh, buy Beyond Meat. Everyone buy it. It's going to $90 million a share, whatever. There are times where you want to get on these trends, and you can. When they back test, when they make sense, when they cool off, or if you are going to get in, by all means get in, but have the appropriate risk in mind. You want to get in when it's here at $1, when it's here, when it's even $2 yesterday or $3 even. If you want to get in, right? Then you can now say, hey, instead of waiting a whole month, risking my mental capital and whatever, I'm going to get in on the short squeeze with everyone else. You could be a dumb FOMO-y retail investor, and you can do this, right? There's nothing wrong with it. I make dumb trades sometimes too, and they make money. You can do this just from yesterday, make 67%. What sounds better to you? So that's what I would like to say in regards to longing high short interest names. You want to be very, very cautious in not only what you pick, but also when you enter and how you size those trades. Actually says, Reese Sweet Green just looked hot. High protein, healthy bowls. I love the concept. Most people don't look for healthy food. Yes and no. That's actually part of the reason why I'm long BRBR. It's a very big growing industry in general. You just got to get in at the right price. I think the industry and the demand for health food is very high, and high protein food is very high. And this is coming from someone who's been eating baked chicken and rice now for 15, 16 years. It's now popular to do that, right? So, I think that's catching on more mainstream. We're seeing dumb marketing on packages, just saying things have protein in them when they don't even have protein in them. So a lot of things are getting, I believe the term is greenwashed, right? Well, that was the organic phrase. We're saying things get greenwashed where they look organic, and just because they're organic, they're healthier when they may not be healthier, right? Same kind of rule applies with things that say protein on them. So conversely, there's an argument to be made with a company like Sweetgreen, if what you say actually is true here, that they're making like healthy food. It's the same reason why, what's that place called? Core. My wife likes to go to Core sometimes. It's like $25 for a salad. It's dumb. It's okay. It's nothing special. But that's another one that's like healthy washed, right? Core. It's like, ooh, boy. There's a lot of these companies that are like that, where there is an allure to these brands right now. GoPro's at 270. Let's go. Peloton's over 8. I'm having a good day. I don't know about you guys. I'm having a good day so far. The only thing that's not working for me right now is AMD. Which again, risking that 240 spot. We will see. Toby says, in my opinion, you can't just bet on something to happen at some point. If you have an interest in a squeeze like that, I think you should study when it comes to that trade and when it happens. Yeah. I don't disagree with that sentiment by any means. It's a matter of, okay, so here's where it's really good to long a high short interest name where I've personally made a lot of money. When I like the company and the company makes money. Those are like the two, you win-win there. The company makes money and I also like the company. Now, if I in general like the company and it's not some dumb thing like, oh, the CEO's not taking a pay or not paying himself and whatever, they're like gimmicky things is what I'm trying to say. If I actually think they have a good product and they have a recognizable brand, you guys will see me mention on this program all the time, I will buy companies like GoPro, like Peloton, that have a recognizable brand and a decent product. Because these companies, and both of them, guess what, have a high short interest right now, Peloton and GoPro. I am long both of these names right now. I'm long Peloton via options, and I'm long GoPro via equity and options. Have a high short interest right now. But they have a recognizable product, they have a good product, and a good brand name. And also, the last piece, their market cap can't be insanely huge, right? And they can't be like resplitting or reverse splitting everything. So as long as the market cap is reasonable, and I define reasonable as under 2 billion is a stretch. If I'm trying to play like a short squeeze, under 2 billion market cap and a free float, I prefer it around 100 million. It may not always be the case. Now, Peloton's the exception to this rule. It's a $3 billion company at this evaluation, but I'm not looking for the moon here. I'm looking for like $9. So I'm looking for a different kind of move, right? I'm not looking for like GoPro to go to like 5, right? It's a different story. Toby said classic Atom pump on Peloton again. Yeah, man. You guys know my show with under 100 viewers or around 100 viewers can definitely pump the $3 billion company Peloton. Omar saying AMD tapped to 240 and rejected. Yeah, look at that. Big wick. Nice reject. This is why I place my risk where I do. The other thing I want you guys to be mindful of, and I think this is a good lesson in general, when you are trading options, you want to be mindful, obviously, not only of the Greeks and obviously not only of the strike, but a lot of the time how I'm successful in trading options is I don't stare at the contract price. What I stare at is the price of the underlying. I need to make sure the chart is within my risk parameters. Sometimes I give up a little bit of a bigger loss, and sometimes I actually give up a bigger gain, or even I'll have a smaller gain, right? Depending on those factors of how in the money I am, out the money, etc., IV, whatever. But I stick to the trade plan. The trade plan is, especially in this scenario, I mean, look, this is my range. I said 235 to 240. That's my range. This is my range for the day on AMD. This is the trade plan. I'm playing to break 235. If 235 doesn't break, or if we stay in this range today, I close. If 240 breaks, again, with volume, I close. I don't care what the contract is. That is going to validate or invalidate my trade thesis. Because I've, again, sized correctly into the trade in general, I don't have to worry so much about, oh, I'm losing $5 more or I'm making $5 more. It doesn't really matter. What matters is being correct on the move. And there are times you're going to be incorrect, but more times than not, and you guys are in the community, you'll know that sometimes I will close a trade out because it hit my risk, and, you know, maybe if I waited a little bit longer, it would have worked out, but my rules are my rules, and that's what I'm going to follow. And it's really that simple. And I think for a lot of you, the way you'll see the most success is by keeping yourself on a really tight leash in that regard. Follow the chart, not the options contract. See a little bit of a dump here across these like more riskier names. Wonder if IWM is down. Yeah, a little bit. IWM sitting down about 0.5% right now. Qs are also red. Look at this. SPY is, again, marginally a penny or a few pennies green right now, while Qs and IWM are red at the moment. Volatility is slowly stepping down, but again, that 1830 is going to act as support here, so we could get a little bit of a volatility pop here near term. UVXY 1070 is kind of in this little, you see my alerts here on the side, kind of in this little like supportish zone. Google pretty flat from the open. Microsoft actually having a good move here from market open, and that little pre-market pump that Hatchet mentioned in the chat. Moving up here. Apple coming down. I'd look for it to backtest this LOI today. That'd be the best case for the bulls. Tap this and go. Worst case scenario for bulls is you break this LOI and you tap down here to 257.35. If things lean more bearish. Not really going to look at Tesla much today. Intentionally. And Amazon really not moving. So a lot of our... Meta actually had a decent move here. A lot of our Mag 7 names not really getting too much love here at the moment. And you're seeing like some of these squeezy names like Opens down, Better's down right now. Even Grab back to the 550 area. Some of the like squeezier names, the momentum trades I've mentioned on this program are getting a little bit of a hit here. So that kind of makes me think that retail may be profit taking, or we're doing the thing where we move money around and money is flowing into Beyond, which is possible. It doesn't mean I want to put my money in Beyond, but these are the things to consider as we look at the market. And like I said, today I lean more bearish on the day. I didn't want to wear the Green Day shirt because the market needs a Green Day today. We need to stay over that red level, the 670.23 on SPY, but I see a greater opportunity in a bear day today overall than a bull day for the market. Wow, look at Oxy. Nice little V bottom there, back to highs. Looking good. AMD wicked the 240 area, then kind of left a few wicks up here as well. So you're going to want to see if price can get under essentially 238.49. If you drive under 238.49, you're probably going to get back to open price pretty quick. Wouldn't surprise me. GoPro sitting at 260. It's funny. As I'm talking to you guys, as I said to you guys how you guys can send me chocolates or whey protein isolate. Ironically, my father sends me a picture, and he's just got like 6 tubs of whey protein isolate for some reason. My dad is an older guy, doesn't weightlift or anything. And he taught me everything I know about buying things cheap and finding a good deal. So he must have found a good deal. Congrats, Dad, when you watch the replay of this. Thank you. Thank you in advance for the protein powder I think you're going to bestow upon me in a random trip. Anyway, back to the market. Beyond right now, sitting about 6. Oxy broke high a day. So this is the other thing I wanted to mention with Oxy I didn't mention before. Oil tends to go up when the market goes down. It's more of like a risk-off asset, typically, right? Typically. So part of the thesis here as well was getting a little bit of portfolio protection here with an Oxy long. Really a very, I want to say Christmas tree day. Very red and green. Like, very mixed bag across the board. But I'm still erring on there being more red than green. Toby saying, what a legend. Yeah, my dad is a legend. He's a legend. He's retired, loving life, and just finding random deals on protein when he can for me. Nothing better than that, right? Ooh, yeah. A lot of stuff. I'm just looking at other names I'm long right now. So a lot of my equity right now is sitting pretty green. However, a lot of them are red on the day. So, not great. Not too great. Sorry, I'm just looking around. Wow. Okay. My GoPro calls are up 100%. Ooh, I don't think I alerted that. I'm pretty sure I didn't alert that in the Discord. I don't think I did. No. Because I said to myself, someone's going to be a dum-dum. Someone's going to make a boo-boo. So, sorry, guys. Sorry. I never told you guys. Alright. Man, we're getting steak tonight. Good way to prepare. The other thing I want you guys to be knowledgeable of is when you see this kind of price action on the market, especially hesitating towards all-time highs, you want to prepare. And that's not necessarily buying puts, but again, like I said yesterday, I put in my X post, I moved a lot of money around. And part of that, again, was going long on Oxy and going long on other, I want to say, under the radar squeeze names like GoPro, for example, and Peloton yesterday, which is down right now, and getting a swing on CMRC. So there are those opportunities where they're setting up pretty cleanly, although the market's looking a little shaky at the moment. I'm about to actually open this long right now on AUR. People love to hate this name. They got earnings coming up. All right, so here, actually, I'll do a full little, we'll do a whole deep dive here. Well, actually, I want to see if we tap 504. But I'm about to open a long, I might just open it now because I'm really only looking to risk like 10 cents on this name. Recent lows at $5. Prior to that break, so that $5 low, you tapped it here again at 504. The last time you got in that range was literally a year ago. Briefly, right here on 11/15, and then again around the same time, early November last year, and then finally, basically, last September. So we'll. I like the risk to reward here. Actually, I think I'm just gonna long it now. Eddie's saying AMD taking the escalator. Elevator. There you go. I'm like, yeah, I just looked at the price. I saw 237. I'm like, bro, they're not taking the escalator. What are you talking about? Eddie's from our community. So when I say bulls always take an escalator and bears will take an elevator. So typically you'll see bull moves kind of go unless there's like a short squeeze or something, and bears go. But knowing how to play both is how to make your money. So when you get a sharp downturn, if you don't break through key levels, you may want to risk off. So that's kind of what I'll wait here on AMD. But while I'm talking about that, I need to initiate this long position on AUR. And shares. Here we go. All right, I am long AUR at $5.07. This is for my small tree count. Our small tree count. Yes, seed to tree account, which is our small account challenge in the Discord. Stumbled over my words there a little bit. Let me just type the alert out for them, and then we'll get back into the market here. What'd I get? 40 AUR at 507. 5% risk allocation. ER risk. Keep taking that elevator, AMD. I'll check in on you in a second. So you guys can see me set a stop loss right now. The low 52-week lows here at $5. It's also a very obvious key psychological level. However, sometimes you get a wick to break those and pop back up. So in this specific scenario, I'm going to extend some grace and do like a 493 stop loss. Why? Well, hold on, let me type this out. 5 breaks, then it typically will wick down to like the next like psychological level. And I don't mean dollar amount. In this case, maybe going to like 495. And then if there's enough liquidity there, like if market makers are just trying to soak up shares and then pop it, I don't want to get stopped out, right? So, and you can even see on the level 2 here, you got someone waiting to buy 11,000 shares. I'm sorry, 116,000 shares at $5 on AUR. Now, that could be a fake wall, but still, someone's looking to spend $500,000 on AUR down here. So that's good enough for me to take a stab. So some equity here with that managed stop, I think, makes a lot of sense. And you're only risking, which I will do it. We'll do a whole little shtick here. Hold on. Let me put the stop in. 493. There you go. Okay, great. Submit. Beautiful. All right. Apologies. So let's see. So if we do a little risk analysis here. Actually, I already have one here. Get rid of that. We'll just reuse this one. Put that there. So I got in at 5. I think it's at 507, right? 507. 507. My stop is at 493. And let's say in the most conservative metric, we hit my first price target, only my first one, just 541. That gives me a 2.4, so almost 2.5 to 1 risk to reward scenario here, where I'm risking almost 3% downside for almost 7% upside here. And that's only to my first price target. And again, this is on equity. So those are the kind of opportunities when we see them get down to these beatdown levels that I want to consider potentially taking along. Little bit of a autonomous driving risk, right? But we'll do a quick little overview because they have earnings coming up. So this would effectively, again, be an earnings risk. But we'll do a quick little run through with AUR. All right, so this is AUR, and currently it's sitting near its 52-week lows around $5. Now you can see right here, this is the 52-week low right here, back a few months ago, about 3-4 months ago. Bounced up a bit, but still definitely in some level of a bear trend here, still moving to the downside as well. Now this is one of those stocks that retail loves to hate. It doesn't move very much. It is a bigger company than some of these other retail favorites at only $9 billion market cap, at least its current evaluation. That doesn't mean there isn't an opportunity here. Why I like this opportunity is because it's currently sitting around, again, this low $5 area key support where I can risk a very small amount of downside for potential upside. Now, full transparency, I just entered along on this name at $5.07 a share. And considering that and considering a stop just a little shy under this 5, I have a 493 stop on this name, offers a 2.4 to 1 risk to return or risk to reward setup to even only my first price target here, which is 541. So I have all these other price targets, as you can see, that I'd be looking to take profit at, but even only risking that first take profit point, it still offers me a 2 to 1 bare minimum risk to reward on this name. Now, with that comes into account that we have to remember that earnings are coming up on 10/28. It's about a week from now. So this is an earnings bet. So there is some extra risk there. But this is a kind of trade I wouldn't necessarily take on option side, but I would take on the equity side because it gives me the opportunity, if earnings are bad or whatever happens, I can get in and out of the trade after hours versus an options trade where you might be stuck. Now, again, this is in a pretty decent bearish trend, but this is also an area of key support that is held now. So if you were to take a stab on a riskier name like this, which don't make money, but very hot product that everyone in retail loves, this is the time to do it. I will also remind you that even all the way back about a year ago, this stock was trading near $10. So the opportunity for greater upside is definitely there, especially on if we see a drive through my 3 price targets here. These are the key price targets you want to keep an eye on. 541, 588, 622. Just shy above that is the daily blue 200 MA, as you can see on my chart here. Breaking that on the daily, and you can see it's acted as resistance here, here, here. Breaking above that flips the script in favor of the bulls. Well, what do you mean? It's just a line on the chart. Well, let me show you. After we had this little fall here, a little bearishness, we started to catch some support around the 200 MA. Now, yes, this is very wild price action back here, but you could see in real time that as we chopped around this price, we essentially, with the exception of this candle here and this candle here, never closed beneath it. And the closes beneath it were very, very close, all things considered, before getting another pop to the upside here. And you can even see here, where we failed it when we actually first got a pretty decent close underneath, which is this candle here on 521. You back tested it with a few wicks here, here, and here before actually rejecting to the downside. So this is obviously, and this goes for any stock you use, the 200 MA is a great, simple technical analysis tool you can use where if we get over these 3 key price levels, it's going to flip the short-term trend in the favor of the bulls, and then breaking that can lead to a stronger push to the upside, because that's also going to put you above these localized highs here. So basically, getting over 654 to 673 could give you a quick markup to 788. So let's just say if 788 comes to us, which would be fantastic, and I'm not saying that is what's going to happen. Who knows, right? We'll see. But let's pretend that I still hold my long from 507, and it goes all the way to 788. Now, what's my risk to return look like? I'm risking 20 to 1. Every single share is a 20 to 1 risk to return scenario. Now, why wouldn't you take that kind of risk? That's fantastic risk. If I said, hey, give me $1, you might lose that dollar, but you'll make 20 if you're right, and there's a decent chance you'll be right, you'll probably take that trade. Equity opportunities like this, when they come into key areas of support on old names that were hated or people love still or people are bag holding, whatever, they offer very, I would call them asymmetric trade opportunities that you may want to consider, and that's why I'm currently long on AUR. Just so you guys know who watch every day or every time I'm live. If I start talking like that, it's because it's for the channel. Let's go, Peloton! Let's go! Hold on, I need to hit the air horn! Let's go, Peloton! At the daily saw right now, broke over 8. We are cooking with gasolina. $9 calls are looking solid right now. I entered these yesterday at, I think, 63 cents. Someone's going to have to fact check me, or I'll fact check myself. Looking pretty solid, though. Getting a little push. All it needed to do was get a little jealous. I was talking about another name, and Peloton was like, all right, pay attention to me. Popped off. That's what we like to see here. It's always what we like to see on the program. Love to see it at 95 cents. Look at the spread, up to $1 almost on these contracts on the ask. You got to love it. All right, so that's AUR. Hopefully you guys like that. Maybe consider that for your investment thesis-I, portfolio-y, whatever. I do want to talk about GoPro. So let's do a quick overview of everything else. Make sure I didn't miss anything. Then we're going to go into GoPro. Because there is, even if you didn't, I got to pick my words here carefully. Even if you chose to not consider GoPro when I mentioned it at the start of the program, we're going to talk about it. It's still a good opportunity here. Toby says, get on this guy, SEC. Yeah. It's funny because I know, Toby, you were in our community in the past. Me, X, and Grumps. These are our analysts, our mentors in our community at Exclusive Trading. We all have our different superpowers. We're all really good at it, but we're all different in different aspects. It's really cool when each one of us wins in different ways. And it's very, it's awesome. It's awesome to be on a team with other people that are just like, that minds work differently, but we're all like killing it in different ways. It's so freaking cool. I love it. I love to be a part of that group. Love those guys. Tom says AUR loves the swing trades. It does. I don't, like I said, not on options. Equity, I'll rock it. We'll see what happens. Beyond up, no, Beyond getting a little bit of push, a little pushy push over the 6. Interesting. So we're gonna go back and look at we'll look at the market, we'll look at our sectors, and then we'll dive into GoPro. And we'll also probably dive into BRBR if you guys like that. Take a peek at both. How's that sound? How's that sound? Before I do that, I didn't do my cheap plug, so I want to do my cheap plug. If you guys haven't already, do me a favor, wherever you're watching, whether it's on YouTube, X, Instagram, Kick, Twitch, or any other place where someone else is randomly, illegally restreaming me for some reason, which I don't really care. Make sure you like and subscribe to the video. Drop a comment. Say hi in the chat if you haven't already. Any form of interaction I greatly appreciate on the show. I hope you're enjoying the show. I hope you made a little money. You learned a little something. You had a laugh or two. Some level of education when we're looking at just red and green lines. I know it can be very, very boring. Very, very just dry. But I am like your A1 to your stock market. Your stock market's your steak, right? And unfortunately, the steak has not been seasoned, but guess what? I'm the A1 to that steak, baby. We're going to make that steak taste pretty damn good. It's well done, so that sucks, but we have A1, and it's going to save the day, and that's why you're here watching the Atomcash Angle. We are the steak sauce to the steak that is the stock market. Someone put that on a t-shirt, and if you haven't already, do me a favor, pop over to that YouTube channel, hit the subscribe button. Once we hit to 500 subscribers, this will be an everyday show, so if you like that idea, do me a favor. If you haven't already, subscribe on the YouTube channel and maybe tell a friend. I appreciate your support. Thank you all in advance. In fact, we'll go one step further today. Right now, I see 6 likes. I set a like goal a little too high last time. I know you guys are watching. I've got 71, a little bit lower than normal. I have 71 viewers across platforms. If we can get to 15 likes, just 15, on the YouTube channel before 10:45. I will extend the stream an extra 15 to 20 minutes, depending on when I start to run out of steam. We'll do that. Here, I'll put it up. Let me change that, though, because this is 40. We'll change it to, how do I edit this? Edit. 15 likes on YouTube. We'll do extension stream. I even put it in caps. You guys like that? Boom. 15 likes on the YouTube stream. If you haven't already, pop on over, drop the like on it. We'll do a little bit longer stream today. Actually, I'm going to move this a little bit because I don't like where it is. That looks pretty good. That looks good there. Right on. Lock it up. All right. All right, let's take a peek around the market. Then we're going to go back into GoPro and BRBR. And depending on if we can get those 15 likes, we'll go a little longer. And maybe we'll do a trade or two, you know. We'll see. We'll see. Ooh. Okay, guys. SPY is right where I said you want to be a little careful. 670.23. Put that on your chart. It is very, 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 very key for the week. As you can even see this reaction here. You have this extra support here at 670.57. So pretty, like, good, right? But little, like, cautious. Look at the volume reaction here. I want you guys to look at this. This is why I put these lines on my chart, and I tell you why they're so important. It's not just random lines. I know some people really don't believe in technical analysis. Here's your proof. You want pudding? You like chocolate, vanilla, whatever kind of pudding you got, or like I got it. Here it is right here. Look at this candle, this 1 minute candle at 10.25. We wicked it. Now, granted, it went 2 cents. We didn't got within 2 cents. So I'm not perfect. But within 2 cents, look at the volume reaction before getting a pop here. That is the second highest. Wait, let me verify. 486. Yeah, that is the second highest volume of the entire day. 2 cents off that key level. Now you've swept that liquidity, it could drop and break it. So you want to be extra careful now, because now you're seeing it test now in real time. But these are the reasons why I tell you guys to watch these specific levels, because they're going to tell you when to be cautious, when to be risk on versus risk off. Popping over to the VIX, I was going to say without even looking, VIX is moving up, right? It was getting near this support level here at 1830. So again, not a one-to-one relationship, but when the VIX move up, the market tends to move down, right? So you're kind of in that flux point. And as I said in the beginning of the program, I know a lot of you have been watching right now, or have been watching, we have all this room to the upside still. You're in a big range for VIX. You're in a big range for volatility. It can mark up here aggressively. Can. Doesn't mean it will, but it can. What it needs to do first, or what the market needs to do first, is get through this level, which it's testing right now. Not looking too great. Ooh, AMD broke 235. Let's go, let's go. AMD puts are still red, but if you got in while you were watching, you probably made money. Toby says, to be honest, your viewer ratio is already pretty high. Thank you, my friend. Yeah, I know. We have great numbers here. I appreciate all you watching. Our average viewer duration right now is around 30 minutes, so that's pretty solid. I appreciate you guys. That means you guys are sticking around. You're liking the content. You're listening. Normally, so for other financial content, they tend to stick around for 5 to 10 minutes on average. So I'm a very small fish, and you guys are dedicated viewers, and I appreciate the support. And I'm not saying that to sound like a jerk or anything. I genuinely mean, like, I appreciate you guys sticking around and appreciating what we got going on here. Now, AMD getting drilled into the earth. I didn't like that one as much. But what I can say are that longs are having
Emotional damage.
All right, that one was a little too loud. Sorry. Earbud users, I'm sorry. I know that was a little loud. I'm sorry. It's a little loud. My AMD puts are now right around my entry. I'm actually going to pop them up with that. So we're going to go back to what I was doing there in a second. I just want to pop them up here because this is an active trade that I have, so I want to keep an eye on it. Now I'm looking for this to drill, like I said, to like 230, 225. This is a good fall here, so I do, if I can, take some profit here. I'm probably going to take some profit here right now. And again, it's not a big gain for me. But I'm just honestly reducing some risk here because it didn't really work out in my favor just yet. So, all right, I'm going to trim some out here if you're in the Discord, just so you know. Oh, shit. 1 second. 40. Okay, that is I love hotkeys. That is a 7.5% gain. That was painful, but we made it. If this breaks 6 on these contracts, I'll trim again, and then I'll put a stop loss on just to, again, de-risk very heavily right now. The market sentiment is clearly shift more bearish, which is good for me because obviously I want things to be bearish as a bear on this name specifically. But I don't want to take on, or what I'll do actually, I'll tell you guys right now, I'll go runner size just to reduce risk. Because what I don't want is a hard fall like this to not cash in on the IV and then it reverse and then my contracts are back at $3 again. I don't want that. So I'm going to stick to my guns here and I'm going to go runner size here on AMD. But I'm not going to put a stop on. Oh, I got my 6. Let's go. Let's go. Not bad. Ends up being a 9% gain. Small accounts. Consider a stop loss, but still let it rock. Ooh, we're going to trim again. Let's go. Let's go. There's 18%. Thesis was right. It just took a little longer than I liked. And gonna trim again. So now what I'll do, 23. Now what I'll do is be a little different here. Now I'm gonna put a stop loss on because now I'm out of, I only have half of my runner size position left. So now I can put a stop loss on. And again, the reason why I'm trimming so aggressively is because we're falling on higher volume, right? This is what I want to see. I want to see a deep, like I want to see this thing drill, which we're drilling. It's great. But again, I want to reiterate a sharp reversal here, which is, can be, you know, people are going to buy the dip, right? It may happen, and I need to de-risk myself from the potential of that happening. Consequently, I need to be able to take some profit here. Because if this whips back for whatever reason and I'm caught off sides, I could turn a profitable trade into a losing trade, which I don't want to do, obviously. Oh, I just had a bull alert fire. What's going on with Weeble? This thing's getting hammered. I'll keep an eye on it. I don't love it yet. And he says, now if it taps 225, that would the call be the move or let it settle? Can you rephrase that? I was laughing because you said, I read, no, that's a skydive, not even an elevator. Let it skydive, Eddie. Let it skydive. That's also the thing I want to reiterate here. So keep in mind intrinsic value. So these are 235 contracts. Even if you had one, right? And this goes to my price target, my overall price target, what I wanted to see was 225. That means each of these contracts on intrinsic value alone would be worth $10 a pop. So even if you had only one and you originally had like 5, that one contract could still make a massive gain for you if you just let it run with a stop loss, because you're only risking your opportunity cost there, which is roughly about $100 to make 500. So you have a 5-to-1 risk to reward where you're not losing any money, you're risking profit, but you have the opportunity, a realistic opportunity to make, you know, an extra 400, 500%. That's where it makes sense if you have the size to do so. Some people don't have the size to do so, and that's okay. But if you have the size to do so, it makes a lot of sense. Damn, Peloton got hammered back down after I sung its praises. These contracts are holding their value, though. Solid. GoPro cooling off a little bit. Watch as an upside trigger if you're long GoPro around this 258 area for another pop here. If I was patient on Aurora, I would have had a better entry, but that's okay. Tapped 5 today, so we'll see if that can hold. Or if I get stopped out today, it is what it is. Again, wasn't risking a massive percentage amount there. As a bear on AMD, you're going to want to watch this stay under the 8 EMA. So getting a little bit of bounce back here, float there, and just reject and drive again lower. So Eddie, for you specifically, because we were talking about AMD earlier, AMD tapped that 240 area. I always give myself like not necessarily a 5-minute close, but I watch the trend because even yesterday when it was around that, it broke 240, right? It stayed there. Hold on, let's go back to here. This is yesterday's price action on AMD. I wasn't convinced that the momentum wasn't stalling out, so I extended my risk a little bit because, again, I was looking at the chart, not necessarily the option, and I knew, I'm like, this looks, I don't think that it's going to blow up here. I don't think it's going to pump, right? It doesn't seem like there's enough confidence to continue the push. And I was right. It went down. It tried again here later in the day and eventually closed under 240. So I was like, okay, that means I'm swinging it because that means my thesis probably is right. It's just delayed. And that's why you got to move like today, where, again, same thing. We got up to 240. I'm like, don't think it's going to... We wick it. Definitely, especially if we leave a 1-minute wick. I'm rocking that. And ta-da, down we go. And he says, if AMD goes to 225, would taking a call option make sense for the reversal? No. I give you a pretty emphatic answer. The answer is no. I personally... Just because something moves down a lot in a day doesn't mean it's going to revert itself back to the upside just as quickly. With AMD specifically, I wouldn't be looking to take a call on this name just because of how it's set up. So I personally wouldn't be taking a call on this name. If you ask that same question on another stock that had fallen a lot in the day, maybe intraday there's an opportunity there, and then we could talk about it. So, but specifically for AMD, I wouldn't necessarily look to take a call at 225 at all. I'd just be out of my put. That's all. I just wouldn't touch it. You know, just because, again, something falls a lot, it doesn't mean I want to be chasing the call side of things. And I assume you mean short term, so you're looking at day trade or like a weekly contract or next week's contract. That's what that information pertains to. A swing is a different conversation completely, obviously. But as it pertains to like a short term trade, I wouldn't be looking too aggressive. 10 likes. Only 10 likes. Damn. All right. We'll wrap things up here in a minute. I guess we'll do the BRBR shtick tomorrow. We got wrapped up in making money, so sorry. We'll look at BRBR tomorrow and GoPro tomorrow. I'll give you guys the thesis, but if you want the inside scoop here, if you liked it when I mentioned it at open, you might like it more if you're patient. No, we could talk about GoPro real quick. We'll do it. We'll do GoPro at least. BRBR is going to take more time anyway, so we can wait on that. But GoPro might be a little more short term. All right, so this is GoPro, and this is offering a very interesting setup. Now, full transparency, I did enter long this name, both with call options and long equity at yesterday's close around, I think, $2.18. Currently trading at $2.55. High a day, currently intraday at $2.73. And very, very, very interesting setup here on the daily chart. So on the daily chart, you can see here, we're still maintaining some bull momentum here with our short-term EMAs pushing to the upside while remaining above all of our longer-term EMAs. This typically establishes a bull trend. On top of that, we had a red SAR here, which is one of my favorite indicators, break today, intraday. But we had that red SAR lineup where yesterday's close was, where it didn't break, along with this downtrend as we respected this uptrend here. So for those of you that like shapes, you got a pennant. And if you want to zoom in here, you can make like a tinier one, but you got some level of a pennant here, and price likes to break out of a pennant, essentially. But in this scenario, we had a lot of things working for it. Yesterday, we had bullish RSI, and I like to say bullish RSI because I don't like saying things are oversold or overbought, because I think that's silly, because things can always get more overbought and always get more oversold, right? But as it pertains specifically to GoPro, and in general, my rule is a 53 to 54 RSI typically reflects bull momentum. It says that the bulls want to push the price up. We want to drive the price higher. Yesterday was at 53. On top of that, you also had your daily MACD curling up at this key point, respecting the downtrend, and now breaking out today above this, respecting the uptrend, breaking out above the downtrend here. Now, you do have earnings coming up, so you do want to take that into account with your risk assessment here. But even getting in long today, as it's at this $2.50 area, I do think there's more additional upside on this name, especially once you break over 305, which is a localized high here. You will have a hard time on the weekly getting over this 0.236 retracement here, which is also around the 200 MA, so that's going to be your 3.57. So that still offers you $1 here, or about 30% upside. But once you crack that, more than likely GoPro's going to float around in this range up here, north of 4.5, and somewhere more than likely in the mid 5s to low 6s, which is going to offer you at least a 100% upside here on GoPro. It sounds crazy. I don't like saying that because people do dumb things if I say 100% upside, but that opportunity is a really, really valid opportunity getting over these two trigger points at 305 and 357. You also have the red weekly SAR, which you may not see here, but it's right there above that 305 level currently. So breaking that weekly SAR is going to give even more momentum. So now you have momentum on the daily and momentum on the weekly. You've maintained momentum on the weekly. And the only thing I don't like, and that's why you have to be careful because it's one of these momentum trades, right? I'm not saying you want to own this company forever. You may not. 1, 2, 3, 4, 5, 6 green months in a row is a lot of green. Getting some level of a pullback could be a valid argument on the monthly time frame. However, with that being said, this thing has gotten beaten into the dirt pretty hard for month after month after month after month. And this might just be like Revenge of the Nerds, right? This might just be Revenge of the Bulls to get some bullish momentum here. So definitely keep an eye on GoPro at this current evaluation. I think it is a very valid short-term trade. This is not a long-term investment. I mean, if you're riding equity, you could have a long-term investment if you really like the name. But currently, if it can sustain above essentially 241, and even if you want to give it a little bit more rope around like 227, as long as it can stay over those levels, I like the bull risk into earnings. You probably will even be able to take profit before earnings and then maybe roll a risk-free trade into earnings. That is what I think about GoPro. Cool. I like GoPro. All right, we'll get rid of the light goal. We'll try again tomorrow. I think that's going to wrap it up, ladies and germs. We'll do one more ring around the rosy here. AMD contracts just broke $7. Hold on, let's zoom in here while I'm live. At low a day. Man, $5 more. Wouldn't that be crazy if AMD fell $5 more? That'd be crazy, wouldn't it? I don't know if all of you watch like the video. Sometimes I just look at the camera and I make a face like I'm on a sitcom. Just randomly will do that. It's a little treat for those of you that watch visually. If you like stupid gag humor like that. I always love when I'm watching a TV show and they acknowledge the camera, break the fourth wall. It's so dumb, but it's so funny. 230 is going to be an obvious level to watch. So maybe I'll give us another minute or two here just to see how we react to that and go from there. One of my favorite like bear looks in general is what I call like the H, right? So it's when you get a big move down and you get some level of a very short retracement like this. This is essentially like an H, right? I know it doesn't look like an H, but it's never going to be an H as you move left to right. But anyway, you get some level of like, you can even call it a bear flag, right? I know you guys like shapes. It's a bear flag. I don't like bear flags, okay? It leads to bias. I do like letters, and this is the letter H. When you get the letter H, you have more downside, typically after you break that low, which essentially is a bear flag, but I like to be different. It's the letter H. I don't care if you don't like it. That's what it is. We are doing the letter H. We do not do bull and bear flags here. This is the letter H. That's what I like to look for. H means more downside. It stands for, have you had enough? Stupid. All right, we're at this 230. You know what I'll do? I'll trim out again, and then I'll just leave the rest on. We'll trim out again. That's a 41% gain. Can't be mad about that. We'll leave the last batch on to see where it goes with a stop on. Everything went smoothly. Alrighty. Alright guys, I think that's going to wrap it up. I will be live once again tomorrow right here on the channel. So if you like what you see, don't forget to pop on by tomorrow. And if you haven't already, please drop a like on the stream, interact in your favorite way. I appreciate it. Omar with the good game, Adam, with the patience. Yes, sir. That's why you got to follow your trade plan. Don't stop, never give up. And also, just as important, when you're wrong, admit you're wrong and take your losses. Take your bruises, take your bumps. Doesn't mean you just swing things recklessly just because you just can't admit when you're wrong, right? You define your answers. All right, last little sage piece of wisdom, and I'm done. A lot of retail traders fail because they do not define the trade before they take the trade. And that's why a lot of Discord rooms also will lose members because they don't understand what they're looking for. They take a blind alert and they're just like, oh, what do I do? Whatever. You gotta understand when you enter a trade what you're looking for, what you don't want, right? Understand, on top of that, how can you enter into any trade and not understand your size, right? Understand how much money you're willing to risk based on what you're looking at, right? I was looking at yesterday about $10 of downside for $5 potentially of upside based on when I entered, because I entered around like 235 when I rolled the contracts. So I was looking at risking $5 or upside for $10 of downside ultimately, right? And more conservatively, $5 both ways, because I was looking at 230, 235, or 240, and I entered at 235. If you don't understand, you don't set those parameters, what the hell are you doing? Right? You're getting a call, you're getting a put, and you're just like, yeah, up, please. Or yeah, down, please. Okay, then what? When do you trim? When do you cut? What do you do? Pulling the trigger is the hardest thing about trading, because hindsight being 2020, you could look at a chart and go like, oh, that looked great there, whatever. But actually hitting buy and hitting sell is the hardest part about trading. The other 99% of trading is waiting. You just wait. It's like fishing. But knowing when to close up shop and when to keep going is the most important thing. So if there's anything, one little sage nugget of delicious wisdom you could take with you before I leave you today, it's that always have a trade plan, no matter what. Do not trade without defining your risk to reward, defining what you're looking for. Because if you fail to plan, you plan to fail. And with that being said, guys, some will say you need to edge to trade. Well, I like to look at things from a different angle, and that's always what you get right here on the Atomcash angle. Don't forget, guys, I will be live again tomorrow at 9:15, and I hope to see you all then as well. Take care and trade smart.
Past, and that's a wrap. You're armed with the angle and your plan of attack. While the show is at an end, your journey continues. We live